Who has ever become a millionaire on their own? Even Warren Buffett took 55 years to become a billionaire, while Jay Walker accomplished the same feat in less than a year. During the dot-com bubble, he founded Priceline.com, which caused his net worth to soar from nothing to billions. But Buffett is still at the top of the list and doesn't appear to be slowing down anytime soon. So that wasn't sustainable, as his net worth also crashed when the bubble burst. You want to accumulate that kind of wealth. Money is a challenging game to play. It's taught brutally competitive, and you can't succeed if you don't know the rules. The issue is with most people is that they may put in a lot of effort throughout their lives, but they still end up in poverty because they lack the knowledge of allowing their money to generate even more income. In other words, they lack investment knowledge. Assume you've been diligently saving and now have an extra $1,000 in your bank account. That is a success, considering that only about 70% of Americans even have $1,000 extra in their bank accounts. Let's imagine you will invest that money instead of using it to buy another useless device or a pair of shoes that you will only wear once before storing them in your wardrobe for many years before finally throwing them away. However, how do you invest your initial $1,000? That is the million-dollar question. Do you invest in the stock market or real estate? Which types of stocks do you purchase? Is $1,000 even sufficient to begin investing with? We'll respond to all of these, plus a lot more questions you may have. To begin the video, click the play button. Take a look at this illustration to better understand what investing is and how it works. Let's say you worked very hard and managed to save $300,000. You may visit a Ferrari dealership, spend a lot of money on a fancy car to brag about your accomplishment, or buy real estate and rent it out. You will receive at least $2,000 per month. In fact, your investment's worth might even increase, resulting in a price increase when you decide to sell it. Since it's real estate, everyone's gonna want it at some point because it's not increasing anytime soon. And that is how business is conducted. But $1,000 cannot be used to purchase real estate. Even if it wouldn't be enough for a down payment, you could still put that $1,000 into other investments and watch it grow. Actually, the simplest method is to deposit it into a savings account and earn interest. But why would the bank reward you for doing so? Should they not be billing you instead? No, you see, the bank will take your money and lend it to someone else at a greater interest rate and split the profit with you. Briefly, that is actually how the banks operate. The main issue with this tactic is that it is not profitable because of the highly low interest rates on deposits. The most you might likely earn is 0.8% to 1%. If you deposit that $1,000 into a savings account, you'll get an additional $8 to $10 in 12 months. This is incredibly low because the Federal Reserve sets an inflation rate of 2 to 3%. If you do not achieve at least 2 to 3% over time, the actual worth of your $1,000 will decrease. That's right, that means you will be able to purchase fewer things each year. That's what it means to have a lower purchasing power. But why are deposit account interest rates so low? Well, back from 2020 to 2021, the pandemic pushed the Fed to lower interest rates. There are generally low interest rates that time, encouraging people to borrow and spend money. Once we emerge from this crisis, which is what we currently are doing in 2022, the Fed has raised interest rates to 2-3%. That increases the rates on savings accounts, but currently inflation is higher than that. That means savings accounts still won't be sustainable and may lose you money over the long term. Purchase of government bonds is your second choice. A government bond is a security that the government issues to raise capital to fund expenditures. If the government decides it needs to build a school but lacks the funds to do so, it may issue an IOU, which is a document that states that the US government owes the owner of the security the sum of the security's value plus interest. Although this example is obviously oversimplified, the main idea is nonetheless conveyed. Since interest rates have been so low the past year, government bond rates are less than 1%, although they were as high as 3% years ago, when interest rates were low. Considering that government bonds are the safest investments you can possibly make, this is not a terrible thing. Any investment has a certain amount of risk. what are the possibilities that the US government would not repay the loan you've made to it? The failure of the US economy as a whole may be required for the US government to become bankrupt. Because of this, US bonds are regarded as the world's safest investments. However, you should consider investing in the stock market to earn a more significant return, like 10, 20, 30%, or even 1,000%. For instance, in the past 2 years, the stock price of Amazon rose by more than 80%. The cost of Google stock increased close to 30%, and the value of Tesla stock rose by 721%. No, you did not mishear me, 721%. Then why would anyone invest anywhere else when they could potentially triple, double, or even 10x their money on the stock market? Well, the answer to that is risk. For instance, there isn't much risk regarding government bonds. In actuality, it carries little danger. However, there is a chance that a specific firm could collapse or disclose poor financial results, and any negative news can cause the stock price to fall. The company might introduce a product, and if consumers don't like it, it could result in bad press, which could cause the price to drop. As a result, more significant returns come with greater risk. Apple has a much lower likelihood of failing than Tesla due to its established status. Still, it has a smaller growth potential than Tesla, which is why Tesla grew by 721% in the past year compared to Apple's 70%. How much risk you can accept without going crazy is something you decide for yourself. That is called risk tolerance. If you only have $1,000 left, it might not be such a wise idea to risk all of it because you could lose most of it if things do not work out for you. Consequently, investing in an index fund is one way investors can reduce their stock market risk. An index fund would essentially invest in these top 500 US companies, since the most well-known one, the S&P 500, monitors the 500 largest US corporations. While some of these businesses will undoubtedly fail, others will prosper. According to past data, the S&P 500's return rate has generally been around 10% since the 1920s. As a result, purchasing a share of one of these index funds entails buying a modest stake in the 500 of the largest US corporation. My 3 absolute favorite index funds are the Fidelity Zero Total Market Index Fund, Invesco QQQ, and the Vanguard 500 Index Fund. They're all excellent investors who tend to favor the same businesses. However, how can one purchase shares in these index funds? Where exactly do you begin? Well, you must first locate a broker. This person is qualified to sell you stocks. In the past, someone was always available, so you had to pick up the phone and dial his or her number to request that he sell you some shares. Do you recall the Wolf of Wall Street? He would make calls all day long trying to sell people worthless investments. Thank God, however, that it is the year 2022. The conditions have greatly improved. Brokerage companies developed apps like Robinhood, Webull, and even other apps so you can purchase shares from the convenience of your smartphone or your desktop. You can start investing immediately after downloading one of these apps and creating an account. It frequently occurs that you want to start investing but have a ton of questions. As a result, you start Googling everything and doing your own research, and eventually you grow tired and give up. Then a few months later you try again. But that is the secret. You have to try again, do your research, and apply yourself. And that is it for today. Thank you for watching. Please don't forget to like, share, and subscribe. We'll see you in our next video.